Right, hello everybody. Let's have a look at Bitcoin and work out how scared we should be. Should we be afraid? Is it going to dump? Is it actually going to go into a bear market, or is it basically going to spring? Any minute. Well, to be honest with you, I have to say that there's not much between it, and it could kind of go either way in the short term. But if we're looking at the daily here, we are at the last sort of level of potential resistance on the upper area of the major support and top area of accumulation. So we're still in accumulation. You know how I talk about the accumulation ranges, whether it be Bitcoin or anything. It's always a very choppy range because it's not decided to break out yet. So we can go from the top to the bottom to the top to the bottom. They can be frustrating. They can go on for an inordinate amount of time. And we always had our eyes on this ending towards the basically end of summer. So mainly talking about next month, really. Where at some point in October, we're really hoping and looking for this to resolve one way or another, preferably to the up. And actually, I still think if we view this on a weekly, the odds are ever so slightly in favour of this resolving to the up still. Now we've got a very crude triangle formation that we could draw in here, and basically what we could hope for is that this is the last stand, really, because we don't want to be closing weeklies below this green 50 exponential on the weekly, right? We just don't want that to happen. But if it did happen, there would be one opportunity for a full-on bounce, whether it be there or a wick just below at the middle bottom area of the accumulation zone. Now that is possible. Is it likely? I couldn't say it's unlikely, definitely not, but it's possible. But for the moment, we're still above the 20 weekly, which is right at this $40,000 to $41,000 upper area of accumulation. It is definitely a strong support, right? But if a strong support breaks, then expect a deeper dive, a much deeper dive, which could easily take us to the 37 or maybe even the $35,000 zone, which would be okay. It would be within this. It would be within this triangle, right? So one thing you could think about when we see these triangles like this, right? This isn't anything you should write home, but I guess it's something that we can always go in for the hopium side of things, couldn't we? You could draw a like a measured move, right? How far is this going to go up? Or down, right? Or down. So let's just say we broke out of this area next week. This points up to roughly about $88,000. If it breaks down, if it breaks down from here, it goes to what, $500? I don't think so. So look, that's just I suppose schoolboy analysis. It's not really relevant. But if it were to break down, we would be going to zero basically. So we're not really going to entertain that. If you've seen that on social media or whatever, I mean, we can look at the up and go, okay, that's relevant, but it certainly wouldn't be relevant to the down. But the measure move would be the same either way. Never mind. Right, so let's bring it back to I suppose smaller term time frames, which don't look particularly encouraging, I have to say. So if we look at the 4 hour, you've got death cross. We're trending beneath all major moving averages. They're almost pretty much all of them. They are all actually facing down. So in the centre of this Bollinger Band, which is looking crooked because of the China dump yesterday. So that big 4 hourly candle there, that was China again. But I mean, you could put it into context. I mean, there's really nothing else for them to ban now. So that might be the last ban that they could possibly even say. The only thing they could say now would be good news, I suppose. On my Telegram, I was saying, look, well, there are some theories I've got, but as to what could take place in the not too distant future, but I guess I'll save that for the Telegram chat rather than these videos. They don't need to be more fearful than they are already. So the 4 hourly chart doesn't look good. We've actually got a short signal actually on the Ichimoku cloud on the 4 hourly. So short term doesn't look good in it, and it does offer definitely a revisit of these wicks at least. 40,600, 39,000 would be very unfortunate. That would probably imply a further breakdown to maybe the 35,000 zone. And again, this is uptrend of support, this is downtrend of resistance. So every day that goes by, this will probably tick up by about $150 or so. And this would be, I suppose, the area where we'll be looking to receive the bounce or the death or death basically. Now, if we think about the stock to flow ratio, we think about the 4 year cycle, and obviously the ever more increasingly popular lengthening cycles, then everything should work out fine anyway, right? All of this is just noise, and it probably just is. To be honest, it probably just is. I'm not saying we're going into a bear market. I take things level by level, but overall, the larger time frames are always my preference, and then to the larger term time frames still look fine. And even if we broke down to these levels or below, it would still be okay within the context of this formation. If we think about how this is looking over here, we are ticking down on the histogram, not effectively gone bearish yet, but we will be looking to have a bearish cross on there at some point soon. So that isn't looking particularly good either, unfortunately. There's no real signals or signs on this that are in the short term bullish, unfortunately. So whatever takes place over this next weekend and into next week, I think the bears still have the upper hand, unless we catch a really good bounce on the $40 to $41,000 zone, and that pushes us up for a nice weekly close. Which again is asking for a lot, because what we'd really need to do is not just have a nice big bounce, but we want to have a bounce which should take us above the 200 exponential. So we're talking about $46,000 closure before midnight on Sunday, tomorrow, really. And that would be bullish, and that would be okay for me. But that's it's not massively far away from where we are right now. I mean, we're heading up to that zone anyway. I mean, we were being rejected on the green 50 exponential, which is not a great thing, but we had sliced right through all the other moving averages, and it was just this green 50 which was posing a problem, and that's where we were rejected from. With or without China, we were having trouble reclaiming that. And then the last stage would be the 200 exponential on the 4 hourly. And again, the reason we're talking about 4 hourlies is because the daily's not particularly good. The weekly still seems okay. So we've got to go look in a bit closer. Get a magnifying glass on this on the 4 hourly. And this is where the battle's taken place. Same with pretty much any coin, really. If we're looking for a change of direction, you could look at the hourly, but I don't think it's as valuable as a 4 hourly, which offers definitely a bit more of a tangible move on a chart. The 4 hourly is technically bearish, and there's nothing about this chart. There's nothing on this chart on this 4 hourly which says bullish. All right, so it does say bearish on the 4 hourly. The daily also says kind of bearish. The weekly's holding on to dear life at this level basically, and just below. So it is just a wait and watch and see. Now, excuse me, kids have been keeping me up all night. So one thing I'll show you on this chart over here. So this is Bitcoin. The last time there was a China FUD of significance where China banned all exchanges, 2017, September 2017. I think it was the 15th or the 17th. Either way, that would make sense. It was around here. We were in a downtrend already. China kicked us down the stairs. We found our bottom. We had a very nice bounce. Now this chart here, but this is a much more bullish chart, you see. So we're trending generally above the 200 exponential the entire time. This is a daily. We compare that to the daily at the moment, and we're below pretty much all major moving averages apart from the 200 exponential. We're kind of catching bounces on there as we speak. So that's about 41,000, 42,000 zone. And the China FUD in 2017 didn't come down to that level. And in fact, the last time it came down to there was July 2017, and we never touched it again. So a way more bullish chart in 2017, way more bullish in its structure, in its momentum. And even though we had these large moves down, again, these are big moves. So from top to bottom, there's a 40%. We continued to rally up in November. We had a nice big pullback before the last stage. There was a 30% pullback before the latter part of the parabolic run. So, I mean, I did put on my lonely Twitter account yesterday that, the last time there was a massive China FUD like that was in September. September, a notoriously bearish month for Bitcoin, and China said we're banning all cryptocurrency exchanges from today. Blah blah blah. It's all over. So there's a big FUD, and then it didn't really seem to bother the direction of the trend, but the trend was definitely a lot stronger in 2017. If you compare that to the trend at the moment, it's definitely a lot more choppy. But again, this is potentially an accumulation zone. Like I say, I'm trying to inject a little bit of hopium here. This is potentially an accumulation zone rather than a steadier way uptrend. And so accumulations can be choppy. And if we think about it in terms of accumulation, we are still within this the upper area of the zone. This top here, 49,000, to this bottom down here, 28,000, is all one giant accumulation zone We're still in the upper portion. If we break down to the middle part, okay, fair enough, so be it. This is where the majority of the accumulation is due to take place. We could easily come back down into that zone again and still be fine. But breaking down to below 33,000, back down to the lower portion of the accumulation zone, it might not necessarily mean that it's over, but it certainly is not looking very good. When you're accumulating, to be honest with you, it's supposed to be steady and sideways generally with choppiness ranges. So we had very, very nasty test of the bottom zone of the accumulation. All these areas were marked out prior to the bottom and the top getting marked. So this was, we've been following this accumulation zone on this channel, so it's not something I've just drawn in willy-nilly. We've kind of had this on since the breakdown began, really. So we had the retest here and I suppose a double bottom. We also had the test up here and a breakout, fake out basically, and a breakdown. So it's all still very much relevant, and like I say, even if we do come back into this zone, it's not bear market, not necessarily. Doesn't look good, but it's not bear market. And I would think about this in terms of the way that the weekly is opening and closing. Now I know we're going into a quarterly close as well. I'm not really going to look at that because there's no point really. But if we did have a decent quarterly close, and that the quarterly close would still correlate mostly to the position of the weekly for me, which would be anywhere above 41,000. But arguably you'd want to close higher than the last quarter. So we're talking upper 40s, 47, 48 really. But ideally, that would 48, 49,000 would be a perfect quarterly close, and it would be a great quarter four, right? But without that, the weekly still being above the 20 weekly moving average is still fine. I would much prefer to be above the 21 EMA, which would bring us to about 43,500, and that's kind of in the middle of the quarterly and the weekly. But I would say that would be pretty bullish to close above 43,600, we'll call it. So, for what it's worth, there's no real way to determine the short-term moves or the long-term moves. It's very much up in the air, and we can speculate as much as you like, and you can choose your favourite YouTuber who picks a very specific direction. For me, if I had to put my money on this, right, which obviously I do really, I mean I'm quite heavily invested, but if I was to put my money on it, as in like making a bet with a decision, I expect that we will break out of this triangle formation to the up, somewhere towards within the next few weeks, in October, and then have a nice run throughout the rest of the year. That's my expectation. But it doesn't necessarily have to happen. We spoke about how cycles do fail and can fail, and this is a very young asset class, and so far the cycles have been fine, but they can still fail, right? But so far no cycle has failed, and also so far it's kind of playing out in a way that we kind of expected. Although the China FUD is just and the strength of the dollar as well. With in fact, there's a lot of stuff going on with China. That whole Evergrande threatening, a potential global economic disaster, which it does in a way, not anything like a 2008 kind of crash or even a COVID crash. Nothing like that is on the cards, but it doesn't show any. It's not. There's no economic strength is going to come out of that. Let's just say that. It'll be worse for China than it would be for the rest of the world. But the rest of the world will inevitably feel that over time, as China reshuffles its economic system and tries to bail itself out, and because a lot of everything that we use, whether it's our companies or stuff that we buy, comes out of China. So if China starts to break down bit by bit, then so do our supply chains, and that causes ripples across the board, which will be felt over the long term for us, rather than a big meltdown immediately. However, there could be obviously a shock in the market. So if we just briefly look at the dollar, and we'll wrap it up. We're still waiting for the breakout from the dollar here. It doesn't necessarily have to happen. This is a monthly. Chart. We could easily get rejected from the center of this Bollinger Band, which is just a little bit higher than where we are right now. You could argue that maybe we've been front run from here, like we were the previous month. But if we think about terms of the weekly, The weekly offers a little further up to about 94. There's not much between it, so I still think the dollar has a little bit further to run before it actually pulls back, and it's in that pullback which would allow for crypto and pretty much most commodities, really, including stock market, to continue with its uptrend. It's all on borrowed time, though. You know, this is in an uptrend at the moment on the daily, and it will be until it gets finally rejected from a significant area between 94 and 95. But on that rejection, it should offer a nice big pullback for everything to rally throughout the rest of the year. But you know, I do believe that next year will be a very strong year for the dollar. So we do want to be careful about how much and how long we should be exposed to any market. When the dollar looks primed to continue with a more sustained uptrend throughout 2022 to 23. And then I think, 2023 will be a great year for everything all over again as everything cools off, consolidates for the best part of a year. Right, I'm going to leave it with you there, but thank you for watching. It's the live stream tonight for those of you who are Patreon members, and for those of you who are not, if you want to, you can join in the description below. Otherwise, I've got a Telegram link as well below. That's all free, and have a nice day. Take it easy, everyone.